Hello, welcome back to FT Markets. The Shanghai Stock Exchange, China's benchmark index, has been on a tear for the past month, up 22%. Here to help me understand what's going on is Naomi Rovnick of FastFT. Naomi, thanks very much for joining us. So run us through it. What are the reasons?
The stock market is on a tear simply because the property market isn't anymore after several years of really blistering growth. The Chinese government, concerned about affordability, has managed to finally deflate that bubble a bit.
Right.
So people who were investing in property, buying their second, third, fourth apartment, have taken money out or not put money in and have put it into stocks instead.
Right. We've got a chart here that shows part of what's been going on in their behaviour. We can see house prices going down, the Shanghai shares going up. How are they funding that investment?
Well, obviously people have cash if they've done well out of the real estate market and managed to sell what they own. China has a very high household savings rate, by many measures the highest in the world. And then you have margin lending, which is something that has really taken off in the last year. That's borrowing from a stockbroker to buy shares.
Right, I think our next chart will show us a bit more about that. And there we can see, well, just explain it. That's the amount of stocks, the value of stocks that have been bought with borrowed money. Yeah?
Yes, and what we've got here is a leveraged rally. That means it's faster than a non-leveraged rally. It also means it can fall faster.
Right. Now, you mentioned a very nice piece you wrote this morning for FastFT, the emergence of some new shadowy funds. What's going on there?
Well, it's all very shadowy. Much in China, China's financial system is not so well documented, but sources of mine who are customers of private banks in China have been offered something that basically translates to private fund. These private funds manage trust vehicles, which can go into property shares, lend to mining companies, but are increasingly, I'm told, moving money into the stock market. And they're also borrowing. They're borrowing money to try and enhance their return, to juice it up, as it were.
Right, OK. It all sounds, I mean, there has been a lot of volatility in this, hasn't it? I mean, how sustainable is that scale of ramp up that we've had?
It's all about sentiment. This is a market entirely driven by sentiment. In China, nobody talks about Ben Graham, nobody talks about PE ratios. People talk about, is it going to carry on? Are people I know putting money in the stock market?
Right.
Is the government doing anything to stop this? No, well, let's carry on putting money in.
Well, what about the government, though? Because the central bank cut interest rates just last month. Has that helped this go up? Are people deciding, look, the money in the bank isn't doing anything?
I mean, the money you get on deposit in Chinese banks is pretty bad, actually.
Right.
The banks, which are majority owned by the government, take most of the profit off of you. So households with these negative net interest rates are always looking for somewhere else to put their money. That made deposits in the bank even less attractive.
Right.
At the same time, what the PBOC was doing with its first rate cut in 2 years is signalling that the government will support the economy. And for Chinese investors, that's a signal to buy something.
Right.
The government has also signalled it's not supporting property. So the last refuge for your cash is this, for many years, very neglected stock market.
And how comfortable do you think the government will be with this scale of ramp up? Is that something you think they were expecting?
The watchword for the Chinese government has always been stability and social harmony. They will probably be quite worried about future volatility. As they have with the property market, I think if they see a bubble forming, getting out of hand, they will worry and they will start to try and maybe very slowly deflate and to cause what they like to call a soft landing.
Right.
Chinese government loves wealth creation, but it doesn't like very exuberant, very rapid wealth creation. The good news, I guess, is that as it's a closed capital account, the government has a lot of control, really, over what happens.
Right. OK. Naomi, thank you very much indeed. There has been a lot of short-term volatility in that rally, so we have to keep a sharp eye on what's going to happen to the big picture over the coming days. Plenty more of that on FT.com, on FastFT, and on Beyond Bricks, our emerging markets blog.